Good afternoon. My name is Eric Levinson, Head of Business Development here for Vena Capital. And we're here today with our Q2 webinar. So we are going to update what happened the first 6 months, Vietnam GDP, the economy, as well as what happened to the markets. And then importantly, focus on the remainder of the year. So for those of you that may have been following the markets, we've had a little bit of what I'll call the best of times, the worst of times. So Dickens quote for everybody. The market the first 6 months was up extremely well, up about 28%. Having said that, since the end of April, we've had a fourth wave of COVID, which has actually impacted us more than the previous waves, particularly in Ho Chi Minh City. And so we've got this backdrop of economic news, which is actually quite good, stock market performance, which has been frankly fantastic, yet an emergence of the fourth wave. And so what we want to do today is we'll spend a little bit more time on COVID because we're getting questions on that, and that is how that's impacting the economy. And then importantly, talk about what's going on in the markets and our outlook for the next 6 months. So with that, I've got my two colleagues here, Michael Kokalari, our Chief Economist, he'll cover the macro. Ismael Pili, our Head of Research, will cover the markets. So with that, let me turn it over to Michael to start the conversation.
Thanks, Eric. So in today's webinar, I have three main topics that I want to cover. But the main takeaway that I really want everyone to get from my part of the presentation today links to your introduction, which is that we have, since the end of April, been in the midst of this fourth COVID outbreak. And as you'll see in a moment, the number of new COVID cases is significantly higher than last year. However, and this is the very important point, the economic impact is much less than it was last year. And that's part of the reason why we've seen the stock market soar that Ismael will refer to. The summary, the main reason why that is really because people in Vietnam and businesses in Vietnam have really adapted. So what you can see on my next slide here is what I just mentioned, what you alluded to. The number of new cases has really soared since last year. That said, I do want to draw people's attention to two things on this slide. The first important point is that most of the new cases are centered in Ho Chi Minh City this time. And the second important point is that the number of COVID deaths from the very beginning is still only around 100, which really speaks to how well the government has handled the public health aspect of all of this.
Yeah. The other thing, I think it's interesting. So we talk about this COVID wave and 400 new cases a day or 500 new cases a day, and for Vietnam, the numbers are huge on a relative basis. Yet when we read the press, you'll talk about countries in the developed world that are emerging from COVID, and they'll have 2,000 new cases a day or 4,000 new cases a day. So what is large for us would be heroic for many other countries. And we've got 97 million people here. So these numbers, when we compare versus other countries, are still actually quite low. And the other thing is a lot of these cases are already in areas that are quarantined or locked down as well. So maybe talk about kind of the government response and how that's evolved.
Yeah, that's a great point. This time around, the government's response has been much more targeted, as you can see on this slide. Last year, when they were facing something new, they did these broad brush strategies where they did a nationwide close the schools, nationwide lockdown. And this time, as the government has learned and adapted, that it's much more targeted. And this also helps explain how not only have they minimized the public health consequences, as you mentioned before, but they've also managed to minimize the economic impact and also, frankly speaking, the impact on people's everyday lives. Yeah. So the other part of that story of the impact on people's everyday lives can be seen in the so-called Google Mobility Index that people are looking at in countries around the world. And what you can see, there's several Google Mobility Indices for Vietnam. I've selected four here, what I consider the most important four. For example, in the upper left-hand corner is people going to work, going to their office. And what you can see on these slides, on these graphs, and plus a few others that we are not shown here, is that basically the hit to mobility this time is about half compared to what it was in the last, what happened last year. And that's illustrated on the slides here. I'll highlight one thing particularly in the slide in the upper left hand, which is again, people going to work. That dip that you see in February, that's basically the Tet New Year holiday. And that's why you see such a big dip there, yeah.
And so GDP, people have talked about, last year Vietnam was one of the few countries in the world to have positive GDP growth. First half was pretty good. Can you give us an update on what happened in the first half and were there any surprises?
Yeah, well, what we just showed on the previous slide is, the people going to work is much more than it was last year, people, going to the store. And so that was reflected in fairly resilient GDP numbers. The economy grew by 5.6% in the first half of the year. And as has been the case throughout this whole year and a half now, manufacturing and consumption have been the two factors that have been driving growth. And you see we had very strong manufacturing. The consumption got hit, but we're still in positive territory. Most of the stuff that's manufactured here is exported, so our exports were very strong. So I think this resilience of the economy in the first half of the year, the fact that the government is handling COVID in a much more targeted way, the fact that people and businesses have adapted, makes us feel pretty confident that the economy will grow probably by almost 6% for the full year. And again, driven by manufacturing and consumption, the same two factors that helped us in the first half of the year.
So you have a 5.6 number for the first half, and you're saying 5.9 for the second half.
Right.
Now, my math tells me that means the second half number has to be bigger.
Yeah, that's right. We're probably 6.25 around there.
I've seen some stats coming from some other banks and maybe even the government that have maybe a 6.5 number.
Right.
Is ours lower than consensus?
Right. Well, there are some forecasts floating around, some of which are made by people who are, quite frankly, not here, so they're not as aware of the nuanced things going on. And I think some of those forecasts had been, and some of them at the beginning of the year were very high, had been hoping or assuming that there would be a resumption of tourism at some point later in the year. And I don't think that's going to happen. Our forecast is predicated on manufacturing and consumption basically going back in line with where they were in the 5 years preceding COVID. So we haven't made any heroic assumptions. Our forecast is conservative, but not overly conservative.
And then there is talk about vaccine passports. There's talk about potentially piloting a program in Phu Quoc. So there
Right.
could be pockets of tourism, but that would be kind of gravy on top of your 5.9% number.
Yeah, that's more of a 2022 story. The story for this year, what we're really particularly optimistic about for the second half of the year is this continued manufacturing story where we're exporting all these products to the US, these so-called stay-at-home goods. And what we saw in the last couple of months is two what I consider very positive leading indicators for the manufacturing sector for the second half of the year. The first thing is that companies, and especially FDI companies, are importing enormous quantities of production materials that they need to produce their products that, again, typically will be exported to the US and other places. So that's a very positive leading indicator. The companies are doing it because they know their own order books. And the other positive leading indicator is that FDI has rebounded this year. And most of Vietnam's FDI goes into production, either manufacturing or electricity generation, things like that. People who follow Vietnam may be aware that we had a fairly substantial dip in the PMI in the month of June. However, that dip in the PMI, which is kind of bigger than what we were expecting, kind of goes against a few other indicators. One of them is that, so the PMI is a survey which is based on 500 companies. Vietnam's government, the General Statistics Office, the GSO, they also do a survey of companies in Vietnam, many more companies, over 10 times the number that are in the PMI. The results of that survey, which is kind of what we would call a beige book survey in the US, were more positive. Also, if you look at the months of May and June, manufacturing production continued to actually increase. Technically, a PMI below 50 means manufacturing should be decreasing, technically speaking, but that didn't happen. So there's some things in there that make us think that that may be giving, it may be the what was the thing in Sesame Street? Which one of these doesn't belong? This may be the which one of these doesn't belong out of all the indicators.
So that's correct. Our chief economist
quoting Sesame Street.
I quoted Dickens in the beginning, and you're quoting Sesame Street.
There you go. It's gone downhill.
We'll discuss this later on this afternoon.
Right.
Yeah. In terms of, now it as an input, are there any other inputs or anything that surprised you in Q1 in particular?
Yeah, I think one thing that we've been really encouraged by is that inflation has remained really well under control in Vietnam. This is such a big topic everywhere in the world. People are very worried and preoccupied about that. And what you can see on this slide is that it appears that inflation in Vietnam has already peaked. And by the way, peaked at below 3%. Long story short, and we don't know what's going to happen with oil prices and the whole drama between the UAE and Saudi Arabia, but assuming that gets resolved satisfactorily, basically what we've seen in Vietnam is that the increase in global oil prices has been offset by falling food prices. So right now, food price inflation in Vietnam is actually negative. It's one of the few places in the world where you have falling food prices. And that's because pork prices have fallen. And I'll just, long story short, I think the main thing that people need to know about this that you see on this slide is that pork prices in Vietnam are down about 4% year to date. Pork prices in China are down 60% year to date. So there will probably be some catch down to do there. It probably means that food price inflation and therefore overall inflation stays moderate for the rest of the year. I think maybe 2.5–3% by the end of the year in Vietnam.
Okay, and then in terms of bond yields?
Yeah, well, this decrease in the peaking of inflation, and that's well under control, we've actually had a 40 basis point decrease in bond yields year to date. And again, this is one of the few places in the world where interest rates have actually come down. And that's because of this, the modest food price inflation story in particular. Yeah.
Interesting. So again, the economic backdrop of Vietnam continues to impress. I mean, for maybe folks outside of Vietnam, we may be able to use the word surprise. I think for those of us inside of Vietnam, it's kind of, you don't want to say business as usual, but it's pretty darn close to at least people trying to make it business as usual.
And it's close to kind of a Goldilocks situation as well.
Yeah. So it's because of the focus on prevention, we haven't had the same amount of economic stimulus. We haven't had the monetary stimulus, and so the economy is doing very well on the back of really manufacturing.
Yeah, in fact, there's been very, very little fiscal stimulus to help. There's been some tax delays, and you pay your taxes later, this type of thing. But it's all organic growth. Yeah.
Excellent. Well, Michael, thank you so much. It's been an excellent painting a great backdrop, and it kind of explains why the market's done so well. So, Ismael, I'll turn it over to you. So, kind of give us an update why the market was up 28%. And kind of your forecast going forward.
Sure. So as you can see from the slide here, the market is indeed in a one-way ascent for the most part. We have seen a couple of outbreaks, first one in the first quarter, and of course the most recent one from April 27th. But it seems that investors have ignored all the noise that's coming from COVID. It's probably a testament to the confidence that they have in the government's ability to eventually address the pandemic spread. They have gone through aggressive contact tracing, aggressive lockdowns, and that itself has helped mitigate the spread of the virus itself. And that is also being reflected in the stock market as we see it. The performance of the market, the VNI that is, has been diverging from what we see in Southeast Asia. The market itself has gone up 28, where ASEAN as a whole is actually flat in US dollar terms. In local currency terms, it's only up about 4%. I think part of the reason behind the VNI's ascent is the fact that since the start of the year, we've been seeing an increase in EPS growth estimates. At the start of 2021, it was about 18% year on year, and where we stand now, it's about 30%. And that has not been a one-way ride, of course, but certainly from 18 to 30 suggests that there's a lot of upside that the market has been seeing, and we do believe that there's still some scope for this number to inch even higher. This figure that we have in Vietnam does pale in comparison with what we see in Southeast Asia, but that's because we did not fall off that proverbial cliff last year. As far as the market is concerned, many people are asking us, look, it's up 28%. Is there more upside left? Have we missed the boat? And our statement here is that no, you have not missed it yet. If you take a look at the PE of the Vietnam market, it's only at about 17 times. this is actually in the mean in terms of historical valuations on the PE basis. And as far as comparing it to the ASEAN region, it still remains at a slight discount, albeit a very narrow one, but it just suggests that the structural story that we've seen in Vietnam is saying that indeed the market is a little bit pricier now, but it is not overvalued. That discount, by the way, is something that we expect will not revert to mean. The mean to ASEAN has been historically around 24%, but we don't think that's going to exist going forward, simply because the structural story for Vietnam has changed tremendously from where we are now versus maybe a few years ago.
Ismael, the other question that we get often, it's not only is there upside from here, but how is it different versus, say, 2018, where we were roughly at the same point level? And I think the point that I would make is, it's really being driven by earnings growth, not by valuation or PE multiple expansion. And so you see earnings growth going from 18 to 31%. That's really what's driving the market forward. And then I know you're going to talk a bit about kind of who's now supporting the market, who's actually buying the shares.
Yeah. The valuations are still not exorbitant. In fact, if you recall, back in 2018, we were trading closer to 22 times PE. As I said, we're trading closer to 17 times, which is just a historical mean. So in that sense, the EPS growth estimates that we have seen increase over the past year, there is, as I mentioned, scope for that to continue. Albeit it may not be as much as we've seen so far, but we do think that it can still inch up higher. Eric alluded to how sectors have maybe differed in terms of their performance. And the biggest one that we want to draw attention to is the financial sector. It's now about 37% of the market, or at least the VNI index, and this year it's up 45%. The bulk of financials is, of course, the banking sector. Brokers and insurance account for the rest. But when we talk about the banking sector, we do acknowledge that there is some earnings uncertainty that's been heightened because of this pandemic that we're seeing at the moment. There could be asset quality pressures that's increasing. There could be concessionary rates that could mitigate or that could pull down the margins. But the mitigating factor to all this is the fact that the cost of funding could remain low because the banks have been focusing on building up their CASA base, as well as the fact that the slower economic growth prospects suggest interest rates should remain low. We apply the fact that the SBV is encouraging NPL forbearance, which means that the provision charges could be spread out for a couple of years, which means that the earnings outlook for the banks may not be as bad as people are expecting it to be. So I think that's going to be a very important factor for taking the VNI even higher.
Yeah, and Ismael, another point that people ask us when we're having conversations with existing clients, we're reviewing their portfolios, or conversations with prospects about accessing Vietnam, is while we do have an ETF, the VN100, our active portfolios actually look quite different than this. So our active share in many of our portfolios is over 60%. A great example you see on the sector weighting is information technology at 1.5%. That's basically FPT, which was up nearly 67% in the first half of the year. In some of our funds, that's a 9% weighting. And so I think for the audience, I think it's important as you think about whether you own Vietnam today or you're thinking about owning Vietnam, the opportunity to own Vietnam actively is still incredibly attractive. Our portfolios, the EPS growth is higher than the market, and we actually look quite different than the market. So even though we may own 36% in financials as well, the actual makeup of our portfolio is going to be different than the index.
Mm-hmm. Yes, we continue to advocate that active investing versus passive is the way to go. This is not dissimilar to what many people are advocating for emerging and frontier markets. You need to have boots on the ground to understand what's really happening in this country. Trying to do it from remote, whether it's going to be in New York or Singapore even, is a little bit one step behind. And the fact that you see a big divergence in terms of sector performance suggests that there is some merit to active investing. Even within that sector performance, there's going to be a dichotomy in terms of outperformers versus laggards. So all in all, I don't think we're going to change our tack. We are going to continue with our fundamental bottom-up approach. And I think it's testament to the fact that most of our funds, if not all of our funds, are outperforming their peers, if not the VNI alone. Yeah. One phenomenon that has grown in importance in this market, of course, is the retail investors. We continue to see record account openings. This is, again, not dissimilar to what we saw in another country way back in the mid to late 80s, which is in Taiwan. Where we are now is roughly where Taiwan was in 1987 to 88 as far as penetration in terms of number of brokerage count. And if you look at where Taiwan now, it's about 80% of the population have broker accounts. Vietnam is only around 3%. This is now being reflected in the fact that the average daily turnover of the market is over $1 billion. And if you take a look at the $1 billion and average it out for this year, we have now surpassed, of course, the Philippines, Malaysia, Singapore, and I would even argue Indonesia. If we count the Upcom and the Hanoi Stock Exchange, we are basically trading a lot more. The structure of this market has changed tremendously. And this, again, is being reflected by the fact that the market has gone up that 28%, ASEAN has gone down, and we have surpassed the Philippines and only about single-digit percentage away from Malaysia's market capitalization. So this is becoming a very, very bigger component of Southeast Asia.
Yeah, can I go back? And so what's interesting as we think about this, it's another kind of what's different about today versus 2018 is the liquidity in the market, the number of securities in the market. And so the average daily trading volume, 2018 was 200-300 million a day. Yes. Now over 800 million, approaching $1 billion a day. So again, for folks that are thinking about how is it different, it's actually really different.
Yeah, it's very much different. I mean, the makeup of the market now is about 93% local. This comprised between institution and retail, of which retail accounts for about 87% of that market, of that tally. If you take a look at what's going to happen in this market altogether, we do think the second half has upside. We do think the VNI will be higher than where we stand at the moment. And the way we mapped out the outlook for this market is we do think that the gains will happen, but perhaps at a more tempered pace than what we saw in the first half of this year. We do expect volatility will be more pronounced. Over the past couple of weeks, if not months, the index has been, I guess, relatively steady as far as increases and decreases, which is not, again, dissimilar to what we've seen in the US. The VNI itself would be trading fairly, but not overvalued. So that could be a little bit of a mitigating factor as to why perhaps it'll be a little bit tough to post another 30% odd gain for the second half of this year. But if it does happen, fantastic. And I think what will happen is that we do acknowledge the fact that earnings and growth estimates may have to be pulled down in the third quarter because of this current pandemic, but we do expect that to pick up in the fourth quarter, which will be supportive of the market gains, and that will keep valuations in check. If we take it beyond the domestic shores and look what's happening overseas, Mike alluded to the idea that everyone is fixated on inflation. We do think that we'll get clarity sometime in autumn after the summer, and I think it will be transitory. That itself will feed into what Mike has been saying, that the US dollar will continue to weaken at that point, and that's always going to be good for emerging frontier markets, ergo Vietnam. And again, because of the fact we've been lagging in vaccination rates, we do expect this to pick up. We've already heard about the number of dosages we've secured. That itself will create that sentiment lift. We do think foreign investors will come back. That'll be the second leg that probably pushes the market even higher.
Now, in terms of volatility, one of the things that we saw, 2 days ago when there were fears of a more restrictive lockdown or rules in Ho Chi Minh, the market went down about a little bit more than 4%. And then the day after, market rebounded about up 3%. And on that down day, foreigners were net buyers. Mm-hmm. And so it's encouraging to see that on the down days, the foreigners are actually stepping in. So, I do think to listen to you, it wouldn't surprise us if we see more volatility. Now, that doesn't mean down 4, up 3, or down 2, up 3, but do you see that there could be more kind of big days, for lack of a better term, in terms of overall movement?
Right. If you go by historical statistics, you should expect bigger days, so to speak. Single-digit increases and decreases for the VNI is similar to, as I said, similar to what's happening in the S&P 500. Second half of the year, that's probably unrealistic if you revert to norm, but this is not a bad sign that the party is over. We do think that the local investors are a little bit more astute and a little bit more focused on the market nowadays. As I said, drawing the parallels to Taiwan, if people know the history behind the Taiwanese stock market, it's very similar to what we see now here in Vietnam. We have very limited options as far as investment is concerned. It's either going to be property, time deposits, gold, or domestic equities. We have the same undervalued currency, maybe 40% in Taiwan then, 10% now. And we do have a populace with a little bit of penchant for speculation and trading. to be diplomatically speaking. And maybe the last thing I'll say is that the interest rates that we saw in Taiwan back in the 80s is the same situation we have now. We will have low interest rates here for the financials to extend those loans. We are not in a debt situation like Taiwan back then, but it just means that there's more impetus to actually look at the stock market here. Yeah. Of course, not everything is hunky-dory fine. There's got to be some risks that we have to be aware of. But the only thing that we're really focused on at the moment is really COVID-related in terms of vaccines and outbreaks. There are sector-specific risks, but they seem to be tied back to the COVID situation. If we had to go with the big sky picture, it would be things like key economic decisions and policies being quite slow, or even the slower domestic economic growth. But as I said, this is not something that's so specific to Vietnam itself. In fact, we would say that we're maybe a little bit more concerned about the exogenous risk. Again, it's COVID-related issues, whether another wave or mutation kicks in. The geopolitical tensions is something that's always in the back of our mind. And again, whether we're wrong on inflation that leads to higher interest rates is something that we have to keep mindful of. And of course, there's all these talks about the reduced support measures, whether in terms of fiscal and monetary support. We do think that that will eventually taper down, using that word taper. But I think it'll be enough for the market to keep rising, not just overseas, but also here as well.
Yeah, and then for those of the folks who are wondering, Vietnam does have a very low vaccination rate. Currently, at probably 2%, 3.5 plus or minus. The government has secured 150 million doses by year end, and so the goal is to have 70% of the population fully vaccinated by year end. And so, that's a very optimistic goal, but one that we believe is achievable, which will certainly position the market even for greater things ahead in 2022. So, our guidance is, when you see a dip, take advantage of that. So,
and by the way, part of the reason why the target is realistic is people are enthusiastic.
Yeah, there's certain geographies where people want to take the vaccine, certain other geographies where maybe people are a little bit more suspicious. In Vietnam, because the government has managed the crisis so well, and people really want to get the vaccine. So people are queuing up and saying, how can I get it, not how can I avoid it? The last thing, Ismael, you've talked in previous webinars about themes. So we've talked about 6 different concurrent themes. Are the themes the same today, and are maybe some themes kind of moving in better importance or less importance based on valuation?
Sure. The themes that we always advocate has a more structural appeal behind it. It's not just about cyclicality. And so the 6 themes that we introduced at the start of this year remains intact. There seems to be a greater focus, of course, on domestic recovery plays. But that's a little bit tough to pinpoint as far as when things will open up in terms of borders, vaccination, and international travel again. But it is something that we are quite mindful for. The other themes that we push, from infrastructure, defensibles, the low rate beneficiaries, FDI consolidation, that's probably ongoing as we speak, albeit probably in a more tempered pace. It's not going to be one of those big things that pop up. But I think the themes that we have, we're still quite comfortable with what we introduced.
So with that, I think we're going to transition to Q&A. Now, we didn't talk about the Vietnamese dong very much. Actually, Ismael mentioned it a bit. So I know there's a couple of things that we can certainly introduce. And I'm optimistic, and we already have a couple of questions in the queue. So let's get to it, and here we go. All right, so Michael, the first question is for you, and there's a question here about interest rates. And so the question here is, some central banks have already increased rates. Can we forecast the trend in Vietnam, and maybe give a little bit contrast with Vietnam and say, I won't say the rest of the world, that's the question, but certainly a bunch of the world.
Yeah, so regarding Vietnam, well, first of all, I'll acknowledge that there have been a few, particularly EM central banks, and those tend to be the ones that their currencies might be a bit more vulnerable, which is not the case here, that have raised rates. Interest rates in Vietnam are still quite low. The deposit interest rates, there's a bit of tightness of liquidity in the banking system that Ismael can address. So it may be the case that deposit rates go up a little bit by the end of the year, not more than 0.5 point. So that will continue to help encourage flows to come into the stock market. And bond yields, I mentioned before, are actually down 40 basis points this year, about 2.2%.
But you said interest rates are low, but bank deposit rates are actually fairly high for individuals, though.
Yeah, but still down something like 150 plus basis points over the last year and a half. Yeah.
Right. So they've come down. They're actually lower than they were,
Yeah,
but
that's right.
relatively they're actually still quite high.
Yeah, that's right. Yeah, good point. And then regarding rates in the world, this is kind of could be the topic of a whole nother webinar, so I'll make my remarks very short. Long story short, and Ismael had kind of alluded to this in his presentation as well, we do believe that when you look at all the economic data coming out of the US, Citibank Surprise Index, the ISM that came out yesterday, et cetera, et cetera, et cetera, US growth has peaked, the reopening boom has sort of peaked. And so I personally think that the talk of the Fed tapering, there'll be much less of it by the end of the year. And by the way, the U.S. bond market is sniffing that out, and you've seen a big drop in 10-year yields as a result. So
now we've actually gotten a couple questions on this already on the Vietnamese dong. We usually cover that, so there's a couple questions on stocks. But Michael, what is the view on the dong in terms of its stability? Is it undervalued? You know, we don't hear much about the Section 301 anymore, but
right.
What's your view on the dong?
Well, the dong is completely unchanged year to date, and I think there's two things that I'd really like to mention. I mean, there's a lot of things we could say, but probably two most important things is that, first of all, I had showed on one of my slides earlier that the companies imported enormous amount of production material that they need to produce. And as a result of that, we actually have a small trade deficit in the first half of this year, $1.5 billion. Quite unusual in recent times. We've always had big surpluses. I really think that will flip to a surplus by the end of the year. And the currency has kind of shrugged it off. It hasn't really moved. And the other thing is that actually, funny you should mention Section 301 because literally a few hours ago,
on Bloomberg, I saw it. Yeah.
Literally a few hours ago, there was some more noise about this topic. I don't think anything will come out of it. Long story short, for geopolitical reasons, and you saw, I think it was 2 days ago, Kurt Campbell, who is Obama's architect of the Pivot Asia, has been saying, look, we need to, the U.S., we need to engage with Southeast Asia more. So I don't think anything will come out of that. But that having been said, that will be also an impetus for the local policymakers here to let the dong appreciate. So I think we'll probably be plus 1% by the end of the year, and then starting next year, we'll probably be plus 2 to 3% a year going forward.
But, you know, for investors who've historically, you know, maybe looked at kind of the 90s or the early parts of the 2000s, you know, investing in Vietnam or many countries, you had to really factor in the currency. I think the takeaway here is that currency is very, very stable.
Yeah, something that we've talked about in a few of these webinars before is that Vietnam is really following the example of China after the Asian financial crisis. Remember in '97, the currencies of Southeast Asia plummeted. Long story short, at that time, the Chinese officials made a huge effort to keep their currency stable versus the dollar, and they did that because they wanted to protect the interest of investors. They wanted investors to feel comfortable to pour their money into the country. Vietnamese policymakers are basically following the same playbook.
If you want FDI, you have to have
Yes.
a stable currency.
Yeah. Yeah.
Okay. Ismael, here's a question more geared to you. So if there is, you know, COVID fourth wave with new restrictions, if there's an extended wave, are there certain sectors of the market that are going to get hit more? Are there certain sectors that are more resilient? And you know, does a certain length change your outlook?
Sure. Well, the obvious answer to this is the sectors that are more directly impacted by consumer discretionary spending. That, of course, means the aviation sector, hospitality and services, consumer discretion itself. Those are the typical sectors, not just in Vietnam, but around the world, that will be impacted by COVID lockdowns and restrictions. The ones that may prove to be more resilient includes the banks, materials, utilities. I mean, all these things are probably going to be quite resolute with regards to the impact of COVID. Even now, as we speak, some of the guidance that they preferred for year-end 21 has remained unchanged. The demand remains strong, and I do believe that they're going to be able to pull some levers to ensure that the earnings projection that they are guiding the market this year will probably be pulled to ensure that they come close, if not hit those targets.
Excellent. And Michael, here's a question for you that you actually wrote about a week ago, so I hope you can answer it. So a question was about FOL. Will there be any changes this year to foreign ownership limits, and does that smooth the path to EM inclusion? And by the way, we did write about this a week ago. I say we, I mean Michael. And so if you go on our website under the News and Insights section, VienaCapital.com, News and Insights, you can see the two-page piece. But for the purpose of the webinar, do you think there'll be any changes to FOL this year?
Well, I think if I give a very abbreviated answer, I think that the COVID is so much at the forefront of their mind of what they, and this also relates to something about the infrastructure. Of course, infrastructure also very important to them, but right now the main priority is COVID. So I don't expect something sort of in the next couple months.
But I will add to that, which was there were in the circular that came out in January.
Right.
There was mention of foreign ownership limits, and there is talk of NVDR. So
right.
I wouldn't say that there's any clarity, but to say it's on the regulators' minds is 100% accurate.
Yeah, we're going in the right direction. It's just that other things have sort of preoccupying them right now.
Which is fine. A couple of questions about commodities here. So this is probably a question for you. Is there a commodity super cycle, and is that impacted with the way interest rates may go as well?
Well, that can also be the source of a whole other webinar. Look, long story short, I think that, not to get too geeky, but if you look at the commitment of traders, the speculative long positions in a whole range of commodities, basically what you've seen over the last couple weeks is that there's just been a collapse in long positions in things like iron ore, lumber is a big example, et cetera. Oil's a special case because we have this UAE versus Saudi Arabia thing going on. And of course, at their last meeting 2 days ago, they did not increase production by 400,000, which we were expecting. But on the other hand, oil has come off a bit because people are thinking, well, maybe this means the alliance is not as strong as we expected. I think that the commodity story for Vietnam is, and we also did publish a paper about this as well, not to deflect the question, but since we're moving the economy so much in the direction of manufacturing and domestic consumption, it's actually less important for Vietnam than, and we showed earlier that inflation is below 3%. So I'm not trying to deflect the question. My short answer is that I think many commodity prices except for oil already rolling over, and we'll see what comes after that.
Excellent. Another question here. This is more for you, Ismael. Trading sessions the first days of July are unusual compared to the previous market trend. Is this a reversal sign? And the question says reversal. I'll just say, is this, like I asked the question earlier, bigger days? Is this maybe the new normal for the volatility?
Yeah, I don't think that we're going to see levels back to the $200 million level that we saw last year. I think it dipped below 1 billion at the start of July, but we're well beyond that at the moment. There were trading glitches that were happening. In fact, it was impeding the value turnover. But one of the companies here actually introduced a temporary system that seems to be addressing that problem at the moment. And we're back again to 1 billion plus in terms of average daily turnover. Again, this is just focused on the HOSE, the Ho Chi Minh Stock Exchange. We are not even counting the Hanoi or even the Upcom, which adds another 200 billion to the tally. I don't think we're going to see much lower figures than $1 billion going forward. And part of the reason behind that is the parallels that I mentioned earlier with Vietnam, with Taiwan way back way. The record account openings. In fact, this closure itself, this lockdown restrictions, might actually allow more people to trade more. We did see that happen when there was a little bit of an outbreak, and that's when it all started to ramp up. The value turnover, people's penchant to start investing, that's a diplomatic word I'll use, as well as the limited options here, is actually leading to this accelerating ADT for the market.
Okay. And so you mentioned briefly, I'll ask you to be a bit more specific. So there were trading glitches. A year ago, the plan was to have a new trading system from Korea. So for those, reminder, the stock market is 20 years old. The trading system was 20 years old. And so the plan was to add on a new system from, I believe, Korea. And then I believe the system that was just onboarded a week ago was from FPT, the technology company we mentioned earlier. How long do you think that'll be in place? And is that really, I guess, a stopgap solution that's just going to facilitate as much trading as, frankly, the market needs.
Yeah, I think at the moment it's proving to be quite successful. We haven't had a technical glitch. The value turnover, as I mentioned, is quite robust at the moment. Whether this becomes temporary and that extends to a full time and maybe we don't even need the Korean system, I'm not quite sure. But I think it's going to be less of an issue. Mindful institutional investors or investors in general do want liquidity. And I think part and parcel, these new systems that have come in, whether it's from FPT or from the Korean Exchange, will go a long way in addressing that concern.
Excellent. And this is a question probably for Michael. Is the global chip shortage impacting production in Vietnam?
No, not yet. I had showed on an earlier slide that the imports of production materials are soaring. If you go back and look at that slide, you'll see that imports of components that are required to make high-tech products, and that obviously include chips, are up 28% year on year. So it's not a binding constraint yet. We'll keep our eyes on that. Interestingly, one thing that is a constraint in some industries is about shipping, and particularly containers, steel containers. It just so happens that one of the companies Vietnam Capital's invested in, Hoa Phat Group, HPG, the leading steel company, they've actually started making steel containers because there has a shortage. That impacts firms like agriculture.
Interesting. And then another question is, when you think about, we talked, I guess in April about the new formation of the government. We wrote about it in May, I believe. So the new government was announced. Have there been any noteworthy changes in policy or any noteworthy announcements?
Well, I think something that's quite interesting is we see clear signs that there is going to be a surge in infrastructure spending. The planned infrastructure spending for the next 5 years was actually meant to be finalized this month in July, but this is also something we put out a report on. You can find on our website. Now that is probably also going to be delayed because of everything happening with COVID. The Prime Minister, the new Prime Minister, has a really strong background in infrastructure, and when he ran one province in the north. So I think that's probably the thing that we see the most tangible.
So maybe no specific announcements, but more consistency of existing policies as well?
Yes, and this infrastructure spending plan, it's not like one announcement. It comes from a bunch of, you've got the Ministry of Transport announcing their plans, the Electricity Vietnam, but when you piece them all together, the mosaic is a picture of much higher infrastructure spending going forward. I'm talking about something like a 40% increase compared to the last 5 years. So it will be very significant for the country.
Well, thank you. Well, again, I just want to apologize. I know we had the technology glitch. As we've been living in a Zoom world for like the last 15, 16 months, and yet every now and then technology conspires against us. So thank you very much for your patience. If you missed the start of it or if you caught the end of it due to technology, we will be posting this on our website in a few days, again at vinacapital.com, and we look forward to seeing you in October with a review of the third quarter and a fourth quarter outlook. So thank you so much for your continued support. And if we didn't get to your questions, I know there were a couple that were VOF specific, we can reach out to you. And if you have other questions, please give us a shout. Thank you so much.